Zoomers and millennials are investing in alternative assets like cryptocurrencies, NFTs, and venture capital instead of traditional assets like stocks and bonds. Today, we look at the social shift in investment behaviors to find out how young people are building wealth in the digital age and why they're betting on riskier assets in private markets compared to older generations who invested in public markets. Have you ever purchased cryptocurrencies like Bitcoin or Ethereum? Bought shares of company before its initial public offering? Have you bought gold or helped fund a business for a cut of its future profits? Do you have an NFT? If you answered yes to any of this, then according to NerdWallet, you've invested in alternative assets. Alts like crypto, real estate, futures, venture capital, and decentralized finance are exploding in popularity thanks to Zoomers and millennials, who are shifting away from traditional assets. Boomers and people from Gen X mainly invested in public markets. Their portfolios consist of equity assets like stocks, fixed income assets like bonds, and cash or its equivalents like money market funds. But young people's portfolios are heavier on alternative assets. While alts can be found in both public and private markets, most are found privately.
What does the shift towards private markets mean?
Well, various studies show that alternatives like venture capital and private equity can outperform publicly traded stocks, but the barrier of entry is really high because typically to invest in private markets, the SEC would require individual investors to be accredited, which means they need an annual salary of at least $200,000 or a net worth exceeding $1 million. Non-accredited investors like you and I, Tyson, traditionally couldn't get into private markets, but new alternative assets like cryptocurrencies, NFTs, and decentralized finance don't have these high barriers of entry, so now we have the opportunity to get into private markets. They've basically been democratized for young people, and I think that's really, really cool.
I think you're seeing this shift from the old school way, very rich people, hedge funds, this organized private club was allowed to invest. And now, they used to call people like you and me dumb money, but now we can invest. Even with a small amount of money, if you do that on a regular basis, you can see exponential gains, where previously you needed a lot of money for maybe some small percentage gains.
Yeah, sounds good to me. And yeah, I don't trust the old ways of doing things, so I'm looking for a better way forward.
Yeah, it used to just be the uber wealthy that could get into private markets, but now people who don't have a ton of money to invest can still get in.
Do you think there's other reasons that younger people are investing differently?
Absolutely. Look, a lot of us have lost trust in conventional institutions. Millennials like me witnessed the 2008-2009 crash of traditional markets due to the predatory debt-based financial system. Since then, young people have also experienced massive inflation after the pandemic, and we're currently teetering on another recession. So Zoomers and millennials view the financial system from a different lens than, previous generations.
So I think young people are investing in alternative assets because they are new and they were created for these younger generations as alternative options because there are a lot of failures in our current system, our current money supply, which is subject to inflation. And there were a lot of cracks that happened in the 2008 financial collapse. And for example, Bitcoin was created in response to this problematic system. So young people see these new technologies and gravitate towards them because they're a hedge against an antiquated system that has potential to fail.
While alternative assets are riskier on paper and their value can be super turbulent, we just want to make sure that we're diversifying our portfolios so that our wealth is not completely tied to stocks and bonds. Many young investors are also looking for faster returns, which alts can potentially offer compared to the stock market. And they want to do that so they can cover the ever-rising cost of living and inflation. So they might not want to play the long game just investing in long-term stocks.
Makes sense to me. I have noticed a lot of friends lately that have been talking about cryptocurrency that weren't talking about it before, and so there seems to be maybe more people getting into it now lately, and it makes me want to get more involved in it. Don't know anybody that has an NFT personally.
Yeah, and a lot of young people invest in venture capital. Granted, they do need quite a bit of money to do that, but still that is something that we're seeing more and more of among people in our generation and in younger generations too. We also live in the age of Fintech, which makes it easy for anyone with a phone to use these automated portfolio managers and stock or crypto trading apps like Coinbase, Gemini, and Robinhood. Robinhood, for all its faults, made investing in the stock market more accessible to the mobile phone generation.
Hey, that's when I got in there.
Yeah, but the company's notorious GameStop saga in 2021 further highlighted the faults with traditional assets, showing how stock prices can be manipulated by private interests. Look, I think this event really pushed young people toward a new kind of capital market, being decentralized finance and cryptocurrencies. Young people are also turning away from traditional investment institutions like advisors and brokers, and they're finding information about how to invest on social media. Granted, enter at your own risk, do your research, but it is cool that people are more empowered to invest at a younger age. They have more information to help them get started, and they now have new opportunities to generate wealth.
With these new assets, you can lose a lot of money if you're uneducated. They're subject to massive volatility. If you're just playing it like a casino, you have the chance to lose that money very quickly. But if you actually understand the technology and what you're investing in, you have a greater chance of getting a return.
Speaking only from personal experience, all I can say is that the biggest barrier for entry for myself was just not having the experience at all of doing it. Like, you can talk to a million people or watch a million YouTube videos, but until I actually did it and actually, spent a couple months being in Robinhood and doing investing and seeing what happens, then I realized, it's not that complicated. But there was also no other way I could have figured out until I just did it.
Yes, and I think that's the thing. People need to have the experience, and that's why we're here to kind of educate people on other ways that they can try to build wealth and follow these new trends. And I like that young people have more options than they did before, and I love that people can now get into the private market, something that was typically and traditionally reserved for the uber wealthy. So that's really cool.
Do I really need an NFT though?
No.
Okay.
No.
Good. Cross that one off.
Don't need one.
Being that I'm not that concentrated in these subjects, I feel like I've noticed a lot of, let's say, the boomer generation people on mainstream media discouraging Bitcoin and these other things.
Sometimes I call it crypto crappo, and sometimes I call it, crypto shit.
Now, if you told me you owned all of the Bitcoin in the world, and you offered it to me for $25, I wouldn't take it, because what would I do with it?
Cryptocurrencies basically have no value. It's just ridiculous that anybody would buy this stuff.
It's like, why are they still saying that?
Sure, I think a lot of them don't quite understand the technology, and therefore they don't believe that this is a real asset. But money can be whatever you want it to be, and a lot of people think that this does have value, and you can see that reflected in the crazy high price of some of these altcoins. So you're always going to have those naysayers who either don't understand it, they don't believe that it's something of value because they don't personally value it, and they have probably also seen a lot of young people completely investing in these alternative assets in the wrong way. Buying them super high at a super high price in hopes of getting rich quick, and then dumping it before the price goes down too much instead of waiting for it to go up. So people are not necessarily always making the smartest financial decisions when investing. And I think that comes from panicking and seeing trends on social media and trying to keep up with it. So you're always gonna have those naysayers. But then there are also people that see this shift to the private market as being something that threatens the status quo and just how things have always been done.
That makes sense.
Yeah.
I think the people that oppose my position are idiots.
What do you guys think about the social shift towards alternative assets and the private market? Have you invested in any of these assets? Let us know in the comments, and be sure to subscribe to The Social Shift for more stories like this. Thanks for watching. I'm Brigida.
And I'm Tyson.